David, the all-share down 1.6%, but not surprising given the way the rest of the world went today.
Yeah, we're down 9 days out of 10 now. Other than Friday, it's just been non-stop, downwards. And we're going to test the low. I think that we hit around about November. It seems to be heading that way, unless something turns around. And if Obama couldn't turn it around today, I'm not quite sure what's going to. I see Wall Street down about 2% or thereabouts. So still a lot of worries in global markets. America now worrying about the earnings season. Yesterday's news in the UK has really rattled markets. Sterling's falling. Funny enough, the rand picked up the rand depreciated against the dollar and euro, but picked up against sterling. And gold was strong. And I think what's happening is that with all these worries, we're getting back to that situation where you're getting the flight to safety into the dollar, US treasuries, and into gold. Gold shares were better.
I suppose the problem with the Obama saga, if you will, is that the fairy tale is now over. Yeah. Now it's actually going to happen, and now people have to wait and see what actually comes out of it.
I think the fairy tale ended a few weeks ago, and the markets have responded, realizing that it's going to be a long time before things turn around. And no matter what he says, I think everybody's just going to listen to the speech. It's going to be a wonderful speech that he's put together, a very moving speech. But I think reality will set in an hour or two later. Just how bad markets are and how bad the economy is.
Marion Roberts coming out late in the day, just I think actually after markets closed, with news that they've lost that contract. It was a joint venture with the NAS Corporation to build the resort in Bahrain. They valued it in the 08 report at 4 billion rand, but clearly another problem, oil prices are low.
They've lost and they've made, and probably lost this one. I think I've noticed that construction shares have been down, and looking at some analyst forecasts, they're downgrading their earnings outlook for the next couple of years on the basis or assumptions that contracts will be cancelled, and I think even local ones as well. But look, the earnings numbers are still good, and I think that we're still seeing some. The companies have come back. Those construction companies have come back to very low PE ratios, but the outlook's still a bit murky at the moment. So not the same as last year. Certainly not the same when everyone was pumped up, and a lot of the companies coming to the market at that stage, smaller companies coming to the market. It was a very exciting sector, but it's sobered up quite a bit now.
What did you make of the Woolworths numbers? People were expecting the least good results of the retailing sector.
Yeah, well, Clicks came out earlier, which I thought were very good. Clicks really finding their place under new management, really well placed in the right area, health and beauty. Woolworths, what was interesting was Country Road did pretty well, and that's dragged him down over the last few years. But not as good as the other ones that have come out now. It still needs a bit more explanation. We've got just very raw details. But I suppose in terms of like-for-like sales, up 0.7%, that's a bit disappointing relative to all the others that we've received.
We're going to be chatting to Wayne Sampson of Ellie's in a little bit, but what did you make of those results?
First of all, it's a very good company. They know their business, good traders and that. The results that came out are only to the end of October, so missed the period. There are some worrying factors that we must ask Wayne. Number one, there were high stock levels, probably ahead of the Christmas season, and also they've still got quite a bit of debt on their books, on their balance sheet. They're in a negative position in terms of cash. They're in overdraft with quite a bit of debt there, and I think that might be worrying investors.